Let's turn to Brad McMillan now to talk more about today's market and his expectations for the month of August. He's Chief Investment Officer at Commonwealth Financial Network. Brad, good to see you again. Welcome back.
Thank you for having me, Bill.
You called today's market sell-off a sentiment reaction, not a fundamental one. What'd you mean?
Well, when you get this kind of a news item where the president is tweeting out, you can see a pullback. The market gets disappointed. Everybody sells first and thinks later. That's what we saw yesterday, only to see the market bounce back. And since the fundamentals are solid, that's probably going to happen again.
Indeed, because we do have a lot of headline risk still out there, do we not? Not only the trade situation, at least the debt issue is off the table, but we still have Brexit and we still have slowing global growth.
Slowing global growth is important, and so is Brexit potentially. But when you look at U.S. stocks, they track the U.S. economy, and the U.S. economy basically depends on consumer spending. We saw consumer confidence bounce back close to recent highs. We see job growth and wage growth continuing. The consumers are going to keep spending, and that's going to give us a cushion that should limit any damage from the headlines.
What do you think Chairman Powell thought of today's tweet? I mean, he made it clear yesterday during his news conference that trade is something that they're watching very carefully and they're learning as they go.
And I think looking at Chair Powell, he pointed out some of the risks, and they actually said explicitly that's why they cut rates. But the reason they're not saying they're going to cut rates more, and this is something that isn't really appreciated, is because they see the economy as basically solid. And we don't typically see sustained market drawdowns without a recession. And a recession still looks fairly distant.
All right, so if you're a longer-term investor, what do you do and where do you look for prices that are reasonably valued at this point?
I think you sit tight. I think the U.S., even though it is pricey by standards from maybe before 5 years ago, it's still fairly valued by the standards of the past 5 or 6 years. In fact, with interest rates low, you can argue that stocks can remain a good value. I still like U.S. stocks.
Brad McMillan with the Commonwealth Financial Network. Good to see you again, Brad. Thanks.
Thank you, Bill.